there and welcome back to Dukascopy TV. With me in the studio today I have Mr. Martin Pring, Chairman of PringTurner.com. Martin, welcome to the studio.
Thank you, very nice to be with you, Monica.
It's a pleasure to see you. Now we're hopefully going to get your market insights, share some of your knowledge with us. If we're looking at asset allocation, could you tell us about your methodology, please?
Yes, we believe that the business cycle is a recurring economic phenomenon, and we also believe that it's a set series of chronological sequences. You've heard of the leading indicators, the coincident indicators, and the lagging indicators. That's a very simplistic way of looking at the chronological sequence in the business cycle, because there's certain seasons for doing certain things, like allocating certain assets, and other times for allocating other types of assets. And the great news for investors is the primary trend turning points for bonds, stocks and commodities are all part of this business cycle sequence. So the trick is being able to identify which stage in that cycle we're at. Okay, and how successful does this strategy perform against other benchmarks, would you say? Well, it's performed very well for our clients in the last 15 years. As you know, we've been in a secular bear market for stocks around the world. And our methodology has enabled our clients to gain more than 40% above the S&P, but by taking half the risk. Some years we don't do so well, and other years we do better, but over the long haul, it works very well. Okay, and can you tell us a little bit about the methodology itself, really? Yes, we'd be very happy to. The black curve here represents the growth path of the economy, and the letters B, S, and C represent the turning points of bonds, stocks, and commodities where they appear in the business cycle. And so you can see that if it's possible to identify which stage you're at, you know which assets to put your money in. So, for example, in stage one, which starts off when bonds are bullish and the other two markets are bearish, you allocate money to bonds and to interest-sensitive stocks. The other end of the spectrum, stage 5, where the stocks peak at the top, the only game in town is to own commodities or lagging stocks, which tend to be resource-based stocks. So that's how you allocate your assets depending on the stage. And we have models for each of these markets to help us identify which stage we're at in the cycle. Okay, well that's the methodology, but in practice, how has it performed really? Well, it's worked pretty well. A couple of years ago, Dow Jones indexes approached me with the view of creating an index based on this strategy. And this chart here shows the results here compared to bonds at the bottom, then stocks in blue, commodities in red, and then the DJ Pring, which has outperformed since 1956, but all these asset classes. And it's done so with a 30% less risk than you would have experienced in the stock market. So we're very happy with the results. Very interesting. And so how can people get involved? How can market participants adopt this sort of strategy? Well, you can follow the index itself by typing in DJ Pring on Bloomberg or Reuters or some of the other data providers. But we also have an ETF called the Pring Turner Business Cycle ETF with the symbol DIBZ. And that follows the strategies. It doesn't track the index per se, but it follows the strategies of the index. Okay, so that's the strategy behind it, but how are you feeling about the market at present, Martin? Well, when we look at global equities, we see that they're still in a primary bull market. I think the next slide is going to show that. And I use a very, very simple approach. What I do is I take the price itself and I take the momentum underneath, or a momentum measure, the RSI, and create little trend lines, very simplistic stuff. And when both trend lines are violated, that signals that we're in a bear market for global equities, or it has since the beginning of that chart in 1966. The current situation is that the market is still in a rising trend because both those trend lines are still intact. And at the present time, the key level would be for the index to fall below $54 on a monthly average basis. That would crack the trend line. And that's based on the World Stock ETF with the symbol ACWI in New York. Okay, well, thank you so much for coming in and sharing your insights with us today, Martin. It's been a pleasure. Thank you. Thank you very much, Monica. Great. Okay, well, that's all from Martin and myself for the moment, but make sure you keep clicking back to Dukascopy TV. Goodbye for now.